Hey, it's Miss Kellie Michele. Welcome back to my channel. Today we have a special guest. Her name is Michele, and she is going to talk to us about how she has used private money to get into the midterm rental space. So say hello, Michele, and introduce yourself to everyone. Just tell everyone a little bit about yourself.
Hi, everyone. So I'm a real estate investor in Texas, and we focus in the midterm rental space. Somewhat of a niche, but that's what we do. So we've been doing that for 2 years and been following Miss Kellie to help us along as well.
Okay, great. So what part of Texas are your properties located in?
So we're located in San Antonio, Texas.
Okay, San Antonio. So what is your background in real estate? Like, did you start off doing something different and got into midterm rentals, or did you just jump straight into midterm rentals?
So good question. I actually was a former contractor in Miami, Florida. So I wanted to start into real estate, didn't know how to get in. So I went ahead and opened up a construction company and was able to partner with fix and flippers and investors at that time. This was about 6 years ago. And so learned a little bit about the construction side, flipped over 500 homes, and then realized, okay, I think I got this down. Let me go ahead and start to become an investor and get into the real estate. So started in the summer of 2021 to acquire our first property. However, 2022 is when we really hit the ground running. So we made it as a business, and yep, the rest is history. We currently have right now 15 in our portfolio in the matter of 1 year.
Good for you. Now, do you own all of those properties, or rental arbitrage, or a mixture?
It is a mixture. So we do own majority of our portfolio, but then we also needed to start to continue to scale. So we have arbitraged 3 of those 15.
Okay. Well, 3 out of 15 is, a minimum amount,
Of course.
Cool. That's pretty cool that you are able to own most of your properties.
Correct. Yeah.
So explain to us, how did private money work with all of this?
Yes. So I'm sure as you get into the space, a lot of people, and as well, they say OPM, other people's money. And a lot of times we don't know what that means. At least when I started, I did not know what that meant. I'm like, okay, I'm going to go and borrow money from someone. Who the heck's going to give me their hard-earned income? But that was a mindset shift that I had to get over, and realize that I was shorting people opportunities because I believe in myself. I believe in how we were able to get and scale our business. So I knew I wasn't going to cheat anyone out. So I started really, Miss Kellie, with just friends and family. So wanted to get over that fear. And there is there's so much money that is under the mattress, so that we're not aware of. And if you know how to really start to build out that pipeline, and if your friends and your family are believing in what you're doing, then that's where you can start to ask for money. I think a lot of other individuals and private money lenders, they want to get into real estate, and there's so many different ways, as you teach as well. You don't have to own the actual home. You don't actually have to even touch any of it. You can be a real estate investor by simply lending, and a lot of individuals do that because they have either gone through the process before, or 2, they don't want to have to go and do the staging and going out and finding the property to arbitrage or to purchase, do construction. But they'll simply want to say, hey, I'm in real estate by lending. And it's just as if you're going to a bank. So.
Okay.
Yeah.
So when you approach private people, your friends and family, right? What paperwork is involved, and how do you structure that type of a loan? Is it something that would be similar to the bank, which I know it's not, but our viewers need to know or understand this. But can you break down like how it is actually structured?
Absolutely. So it's actually a very simple process. once you have the paperwork. So I do highly encourage that you go to your local attorney or CPA, or if you're in a mastermind that does anything with real estate in the sense of purchasing, to really reach out to them. You can Google things, but I want to make sure that I'm letting you guys know, we want to make sure you have that one legal document. So you may have to invest into it, and then you can utilize that document all the time. So there's two main instruments that you would want, or documents. One is a promissory note. So simply, you do have that. We just never look at it when we purchase a car, when we purchase a home, or anything of a big purchase, even a credit card. All the stack of papers that they give us that we never look at, that's really a promise to repay, and that we do have a debt. So simply, you would make sure there are certain things you want on there, the terms, what the how much they're lending you. And in our situation, we have the actual property. So they actually put a lien on our properties, just like the mortgage. So a lot of individuals don't understand that a mortgage and the actual real estate, they're two different things. So you have a mortgage and a deed. So you actually will put a temporary lien on the property. So like I tell my, my investors and my lenders, hey, if I decide to run away and go to Costa Rica or Cabo, you have a collateralized property that you could actually I can't sell until I pay you back. So that gives them a sense of security, like, oh, I've never thought about that. Same thing with a mortgage. You don't pay back, they'll foreclose on you. So it's the same process. It's fairly easy. I actually, since we are a small family owned company, and it's exciting. We've made it exciting. I will go down and file it with the courts.
Okay.
And I'm in 15 to 20 minutes. I think the longest time for us to really go through the transaction is just them understanding what they're lending and why they're lending to me. And then the paperwork is the simple part.
So whenever you're approaching someone to talk about getting a loan from them, what are some typical questions that they may ask?
So they will, one of the things is I like to educate our lenders, and I can start from the beginning to, and so my first question is, how familiar are you with real estate, with private money lending and real estate? If it's someone that's brand spanking new, they're going to say, what are you doing? So when coming to midterm rentals, so typically, obviously we are asking and seeking now for construction, or we have, and we also do for furnitures. But one of the things I don't want to scare, your following, is that the entry to barrier could be up to, could start at 15,000, 20,000. And we all know that we use that for furniture. Right. To furnish the properties. So depending on what market you're in, our market, we usually about 20,000 for that. So we call those micro loans because they're small loans. And when you start to approach, your lenders, they're like, what? I could start with $20,000. I didn't know that. I thought I had to start with 100,000. And so their question is, how long do you need the money? So I do a lot more of the interview questions. One of the main things that I always tell my lenders is, can you part away from this money for at least a year? I don't intend to hold the money for a year, and we'll talk about how we do payment structure. However, if something happens as our market is shifting and continues to shift, we want to know that that's not their rent money. That's not their vacation money. That is money that they have in a 401k. That's money that they have in a savings that's not making them interest, that they could be able to part with. So some of the typical questions, they'll ask me is, what are you going to do with the money? We obviously want to be full and transparent. That's the trustworthy part. Right. And then I also tell my investors, it depends on how much you want to be involved. Obviously, we're always doing social media, especially if we're in midterm rental space, to gather people to come to our properties and get to that. So I let them know, look, I can give you phases of what we've, so you can see the property. A lot of people like to see it. Some are virtual investors, but at least I can get that whole documentary. I'm doing it anyways as we're building our journey on social media. Right. Some just say, give me the terms, tell me when the money is coming back to me. And then they'll and they don't want to be heavily involved. So then I make sure I don't, I just follow the legal side of it.
Mhm.
And that's it. Yeah.
And most places or most states, they have a promissory note online for your state, or, so those are pretty common. So just to make sure you guys are aware, it's pretty easy to get a promissory note if you go out there and just take a look. So, okay. So you have your people, you give them, the information they need to make the decision of whether or not they want to lend to you, right? So then once they lend to you, how do you go about paying them back? What is your strategy for paying them back? And do you pay them back within a year, like you just said, or is that just the goal, or how do you determine that?
So it really depends. The great thing about structuring this is it's what your threshold and what you're comfortable with. There are some negotiations when it comes to that. So I will tell you, there are many times that I get on the phone with private money lenders, and now we're going outside our network with total strangers. And when we first, and like anyone, we work very hard for our money. When we get on the phone, they're like, oh, I only have 30,000. By the time they are educated on how my process works and how everything, and it's the process I just told you, look, we're going to we're going to put your money into a actual property. We're going to buy furniture with it. For example, it is for our midterm rental space. We provide, they don't know, a lot of people don't know what midterm rental space is. We're going to provide for travel or nurses that, and corporate professionals. And you're backed by real estate, you're backed by a collateral instrument. So when they start to hear that and understand that I'm educated about it and what I'm doing, I always usually get off the phone call and there's usually double the money that they are wanting to lend us. From there, there's negotiation. I typically don't like to pay back right away. So there are lenders out there that will let me do a balloon payment at the end of it. There are other savvy lenders or other lenders that say, I would like my money back on a monthly basis. So you just carve out from your gross, from your profits, a healthy, where you can be able to pay them. So just consider it is taking from your profit, but you don't have to come out of your pocket. So if you are getting other individuals, instead of you coming out with that $20,000, you can go get another midterm rental. And that's how you can scale your business. I typically tell them that I like to hold it for a year, usually because remember, every time you hold someone's money, you are, what's in it for them? They get an interest rate. Right. That's so the longer you hold their money, the more interest that they are going to accumulate. So I try to get them out of it between 7 to 9 months. I've had recently some individuals says, no, I don't. I actually want it for a year. I want to part ways. So that's actually good for us as well. But if they say that, it really depends on the terms. If they want to get monthly payments, quarterly payments, or if they want to get annual payments, we're currently structured as annual payments. They just get a balloon at the end. But what I like to do, and something what we do a little different, is these individuals are touching their savings account. These individuals are touching their 401ks typically. Usually we get those letters from the end of the year from our banks that show us our whopping 0.2% interest rate. Yes. We actually send them out and we'll give them their 8% annualized interest rate, and it gives them, and they're like, whoa, and then you can look from one bank statement to another. So we simply say, do you want to continue to work with us? Or do you want just your interest back? So you want to roll it into another deal, or do you want your interest back? Or do you want us to go ahead and fund you the money totally? When people see that they're it is a very seamless process and pretty easy, they always roll their money back into another deal. So once you start building this little nest egg and pipeline, as long as you know how to be disciplined with other people's money, then you could start to really scale your business and be able to buy more properties.
Yes. So I recently, like last year, got my first private money loan. And I mean, well, it was from a family friend, right? So I'm like, I've said this before, I'm a person who does not like to borrow money from people, but I had to change my mindset and just say, yes, I got to go ahead and do this, because I know, like you said, other people's money is how you grow, right? And you just have to be responsible with that. I just always had the fear of like, oh, what if something happens and I can't pay it? Or, I'm vacant for a month and I'm short, like those things run through your head, but you have to just keep moving forward and believe like, hey, things happen in any business, in life, whatever. You just got to keep it moving and, continue to fulfill your responsibilities. But it has definitely helped me grow and get more units and be able, like you said, to furnish it and do the things I've wanted to do, to the point now where I'm like, okay, let me pause, stop getting properties and just kind of enjoy the profits a little bit. And then later on, at some point, when I feel more comfortable, I'll go out and get some more, right?
Yeah. Yeah. And one of the things I will say is that's how my mindset was. So I've been an entrepreneur since 2013. I ran a very successful consulting company. I've ran a very, a construction company. And then running into real estate, I did liquid and bring some of that over. But the scaling of what we've done, you can get tapped out rather quickly.
Yeah.
So, my first lender, and I will never forget this, and this is what has changed my mindset. I was scared to death. I was like, I'm not using other people's money. That's going to make me feel like I'm poor. It's going to say that I'm not a good business operator. Everyone does it. We utilize and we go to a bank to get a loan. We use it for our cars. We use it for other things. We use credit cards. We're lending. You got to learn how to leverage. And so my first lender, he told me, he's like, I've been waiting for you. And I remember I was asking for 30,000 and I said, I'm going to ask you for $30,000 and I'm going to cover 20,000 of it. He's like, and so that's 50 grand. And he goes, I'll give you 60.
Oh.
And I was like, okay. And so he goes, I believe in you. I've seen what you've done. So again, that's the big thing, is the trust factor.
Yes.
And it is attainable with strangers. You just have to know and be passionate about what you're doing. Because I have now my new rounds of individuals have been strangers, but they want to get into the space. And yes, there is a fear, Miss Kellie. One of the things I will tell you is open communication. Right. I recently had it. I had it last quarter. A good thing we had one private money lender on something, and I want to give you the true good and ugly, just so that every one of your viewers can understand that there is. One of the things I do, and that's why I ask our lenders, like, how much do they know? Everything's a risk. So they do understand that they're tying it to the risk. But if you know how to pivot and you know how to be able to really just have that open communication with your lenders, they will be understanding, because guess what? As long as you're telling them, they're still making more money on their money. Right. So if it is that you have to extend it for 3 months, 4 months, or 2 months or a month, you just let them know and have that communication. Obviously, there's a couple of documentations that you still want to be in compliance with, but you can do it. And then, like I said, I had one private money lender I had to do that with. I was, again, we purchased a lot of our properties. We were in a refinance phase. And interest rate, usually we get a cash out refinance. So our loan to value usually is at 80%. Well, it dropped to 65%.
So
oh gosh, 15% of my earnings that I was going to put back into the company, actually, I had to come out of pocket. So talk about pivoting and talk about being very and not giving up. Again, we're talking a scale of things. I would recommend do this once, like you said, fill it out, pay back your first term or your first person, and then be able to start to build that and build your confidence and your trust. And then you also have a track record. But I had to just let them know, look, this is your second term with us. We've done it again before. Here's what's going on. But guess what? I'm going to pay you another 1% per month until I pay you back. They were fine with it. And then they went So So my thing is just be open and don't be scared. I think that's with anything in life. Hit it, head on first. And just know they're taking a risk on you, and it's how you handle it of
Mhm.
how they're going to be able to be receptive and ever lend you again. Everyone goes through that. So
Yes. And I can definitely say, like, totally to your point, when people see what you're doing and they see that you're running your business the right way, you're honest, you're open, they believe in you, they are more willing to loan to you. That's exactly how my family friend loaned to me. Like, he was like, oh yeah, I see what you're doing. I know you're good.
yeah,
Here you go. And it was just that easy. And I'm like, oh, okay.
yeah.
Like, you're gonna give me all of the money I asked for? Okay. I'm thinking I had to go to several different individuals and like pull the money together. But he's like, no, here you go.
Yeah.
Cool.
Absolutely. No, and it's true because like I said, there's a lot of individuals that are out there. I'll give you an example. My business partner is my mom, and my business partner, we learned about all this. She didn't have a lot of liquid to come to the table. Corporate America back then. This business has been able to retire her into entrepreneurship, or get into entrepreneurship, and now she's retiring. 1 year we've been able to get her retired. But she had her 401k. So I keep emphasizing on that because there is a lot of individuals that have signed up for 401k. There is a process, so you can't just go to your John Hancock or Carl Schwab and just go take the money. Seek an attorney with that, or do some research on it. They would have to transition it to a self-directed IRA, and when they do that, they can tap into their money before the age of the retirement, which I believe is 62, 63.
Mhm.
Individuals will realize that they'll make more money with you than they will make with them. And when I say that, understand the healthy return. It's not going to take a lot from your profits. So, it depends on what you negotiate. It's really how you feel. I will say in the market right now, what people feel to lend is anywhere from 8% to about 15%. So I want to give that big window because it's really up to you to sell your vision. But the people that are not in the real estate, they're okay with an 8% annualized return. So understand that, guys, it's not per month because that would just eat at your cost. That's very high, but annualized. So look that up, Google it, and it'll tell you what that means. But they don't make that. They're making 2%. So going to friends and family, they're like, I see what you're doing, but I'm not in real estate. But then you have the savvy real estate investors. They're the ones that want to get you for that 15%. And I've turned away that money. I'm not that big yet. I'm not going to, and I give it to them that if they get it. But there's so much out there, right? There's so much money that's out there. But like you said, yeah, once you got your first one, it's like, wow, why didn't I do this before?
Right.
Yeah.
So what do you feel like are the pros and cons of using private money for midterm rentals?
So for me, the pros are obviously you're able to scale your business. And it's not only for that. We have operating costs, and we always forget. We always forget to pay ourselves. We always forget to, especially if you're doing this full time, more if you're doing it part time. So you want to make sure that cash is king and being liquid. But also think of it as like this, guys, and I forgot to say, but also think of it as you're giving other people opportunity to get into the real estate game. That's how you have to have the mindset. People you're going to hear no's, but people partnering with you, you're giving them an opportunity to pay into you for them to get into real estate. Because then they tell their friends and family, I'm in real estate investing, because that is a component of real estate investing. So the pros are you are able to purchase or furnish more properties or do the things and partner by you still being the owner and you owning your arbitrage or however, partner with other individuals to show it how it works. Also the pros are, like I said, you're able to, if you're disciplined enough to continue to do this and scale your business. The cons is you have to be disciplined. The cons are, for me, you have to be ethical. You can't go around because it will go fast, go around and tarnish your name and take someone's money and then never pay them back. That's the con. The con is you do need to make sure that you have things very, very organized when it comes to this, because you are playing with other people's money. You are using other people's money.
Mhm.
The con of it, just like you mentioned earlier, is to put enough in reserves to understand that there may be those off seasons. There
Right.
may be that 1 month that it's not booked. So the months that you are booked, or the months that you get that insurance contract, you need to make sure you're putting that money and stashing it away.
Yep.
So really understand that, because the best thing is to have that money in reserves. It's a temporary loan. Have it to the side before your deadline, than not have it at all and
Mhm.
having to have that uncomfortable conversation.
Yep. And to that point, like in this business, sometimes we have vacancies, it may not be a full month, it may be part of the month, but either way, you have to cover that. Right. So to have those reserves just to cover that amount of time where no one is in the property is a big stress reliever, right?
Correct. Yeah.
And go
Yeah.
ahead.
I say, and just think of it. If you're seeking $20,000, you get it at 9 months. Do $20,000 divided into 9 months. Take it out of your profits. Just take it, put it in a bank account. Just take it and put it in a bank account. At least for your first time round. If and then you'll learn how to play with the money. But you don't want, and when I say that, it's just knowing when to start to save. You'd be surprised if we do the calculations, $20,000 divided into 9 months. You're obviously going to have to add interest on that. So do that at 6 months, which when you do that, it's very, very low. It's cheaper than doing it on your credit cards. A lot of us utilize credit cards, or our furniture companies that are save, the no interest for 60 months, but some of us don't have good credit, and maybe are working on our credit. So this is a way for you to be able to again, give someone else an opportunity and do it. But when you really do that, compared to what we're getting off our profits in our arbitraging and or midterm rentals, you guys got it. You just got to be disciplined. You got to be disciplined.
Okay, cool. So final question. What advice would you give to people who are trying to utilize or want to start utilizing private money for midterm rentals?
So it goes back to the simple basics. Start with your cell phone. Start with your current network. Your current network's going to know what you're currently doing. Start to feel a little bit more comfortable with that. Our cell phone is our most powerful, or Rolodex, so to speak, are our most powerful things. And start just to talk to individuals. I always tell people, individuals that I talk to now, a lot of them are a little bit older, because, they have their retirement money and it's just sitting there. And I'm like, how would you like to be able to partner with us and be able to get into real estate investing with money and make more money off your money that you currently have for retirement? And they were like, well, I'm interested. Some will say no. It's just like anything. We do our cold calls to these to get contracts for these insurance companies. It's the same thing. So start with your phone, start with your friends and family, get a little comfortable with that. And you'd be surprised. I will tell you, I've done outreach into my Facebook community, into my local. I was very surprised and shocked. I didn't even know just about 2 months ago, we got another individual that has joined our investing side. Didn't know where he came from. Didn't understand. I don't know how we followed each other. But it happened, right? He wants to get into real estate investing, but has a full-time job, doesn't have time. Went into our website, went into seeing what we've done, and said, oh, okay, well, you look like something, you look like you know what you're doing. So I'm going to take that risk with you and do it. He's received that value. So it's all, also look into your own things. A lot of us don't realize this. We have our own savings and we really don't even think about that. There's probably a lot of you that do have 401k. There's probably a lot of you that do have, different mutual funds and CDs out there, or even money in the savings account. Do remember, money that's sitting in the bank is not making you money.
Yeah.
So always remember that. So start with that. Start with obviously what you're comfortable with as far as what you're seeking. Know what you're seeking. And yep, that's kind of how we started.
Okay. And you know, another thing that just came to my mind is a lot of people don't know that they can utilize life insurance depending on what type of policy they have. So like if you have a whole life policy
100%.
and you've had it for a while, it has accumulated a cash value. So you can take a loan against that cash value and use that to invest in something else and pay that back off to your insurance company. And it's a very reasonable interest rate. So you guys may be able to look into that if you have a life insurance policy and see if that's something you can do.
Yep, there's whole life policies, and there's some aggressive whole life policies out there. Don't know if you know, Miss Kelly, but they are where that you can actually, like you said, within 45 days of actually opening the policy, you can actually start to lend. So, but the traditional whole life policy, 100%, typically it's about 5 to 7 years, like you said, that you've invested. I have one. You just actually made me think of it, and to actually look and see if my maturity date is there, because I'll definitely start using that. And you, like you said, you just start paying that back to that as you get your revenues, but now you're not having to worry about coming so much out of pocket. Yeah.
Right. And that's a pretty simple process. It's just picking up a phone, making a call. They might have you fill out or just sign a document and you get the money in your account or a check within a couple of days. It's a very easy process. I've done it before. So of course,
There you go. Yes.
Okay, well, tell everyone how they can find you and find out about your business and what you have going on. Go ahead and tell people how they can reach you.
Yep. So you can reach me at my story Michele. That's where all the real estate investing happens. Some of these projects, if you know, as far as for private money lenders and any art construction, and that's across all handles: Instagram, Facebook, TikTok. We're not on Twitter, but any of those 3 major ones we are. So my story Michele, and you can always follow us. And we're starting to do a YouTube channel as well. So
okay, cool.
yeah.
And I will also put all of that information in the description below. So you guys will be able to go to the description and check that out. Okay.
Okay.
All right. So Michele, is there anything else you want to share with the audience before we end our video today?
So just I would say get out of your own way and continue to build this business. And I'll tell you what the only limitations that you really have are your own limitations that you set for yourself. As you heard with Miss Kelly, you heard from myself. Once you do it, I know I kicked myself in the butt and said, why didn't I do it sooner? But also just remember, you're giving other people opportunities to believe in you and help you go along your journey of building what you're building. And they're all forever going to be grateful for that, because you partnering with you and trusting in you and so forth. So just keep going out there and grinding and get it, and continue to build this business of what you're wanting to do for whatever that purpose and why is.
Okay, great. Well, thank you so much, Michele, for joining us today. And you guys, make sure you like and subscribe to this channel so you can see more information in the future about midterm rentals, how you can get into the business and how you can start your own and manage it and do all of the great things that we have been out here doing, right?
Yes.
And also make sure you check the description below for some freebies. I always put something down there for you guys, and my online course is down there as well. So I hope you guys enjoy the rest of your day, and I will be back with you next week with another video. Bye.
Bye.